Welcome back to the Tech Corner. I'm Senior Markets Contributor here with the Schwab Network, George Sillis. Thanks again for joining us this week. Now, in this week's edition of the Tech Corner, we're going to be revisiting Meta platforms. Now, Meta Incorporated is the world's largest social media company and is a classic two-sided platform with an advertised-based business model. The family of apps segment includes well-known platforms such as Facebook, Instagram, Messenger, and WhatsApp, and these platforms serve community building, communication, as well as content sharing. They generate substantial revenue through advertising services. The Reality Labs segment focuses on advancing virtual and augmented reality products such as MetaQuest devices and AI-enabled wearables. The company's strategic focus as of late has been to include significant investments in artificial intelligence to drive consistent content delivery, to enhance ad targeting, as well as improve user engagement. Now, when it comes to revenue, advertising consists of 95% of total system revenue, and the company derives about 55% of its sales outside the United States and Canada. Now, to just give you some context of the scale of this business, as of December 2025, Meta's apps have reached over 3.58 billion daily active users. Now, when it comes to competition, Meta faces it from several key significant players in the technology and digital advertising landscape. This includes Alphabet, symbol Google, which essentially owns YouTube, TikTok, owned by ByteDance, Microsoft Incorporation, which owns LinkedIn, as well as Amazon in the digital ads and e-commerce space. To some extent, these companies all rival Meta in various domains such as digital advertising, AI development, and cloud computing services. The current social networking market also includes other popular platforms such as X, which is formerly known as Twitter, Reddit, and Snapchat. Now, the unique value proposition for Meta platforms lies in its extensive ecosystem of interconnected apps and services, which boast a vast global user base of nearly 3.6 billion daily active users. The company's aggressive investments in artificial intelligence and machine learning enhances user engagement and ad performance, providing advertisers with a robust platform for reaching consumers. The integration of artificial intelligence also enhances ad targeting and personalization, driving higher return on investment for these advertising and publishers. Now, in most recent news, going back to the 28th of this month, Meta posted its Q4 2025 revenues and earnings. On a GAAP basis, the company earned $8.88. This bested the estimates by 66 cents and was higher by 11% year over year. On top of that, nearly $60 billion in revenue at $59.89 billion was up by close to 24% year over year. This beat the estimates by about $1.42 billion. Now, despite the fact that revenue was higher by 24%, EPS was only higher by 11%. This is in the context of high capital expenditures. For instance, the company posted R&D expenses, which topped $17 billion solely in Q4, up nearly 41% year over year, which cut into that net profit, as I mentioned just a moment ago. Yet at the same time, average revenue per user rose 16% year over year, which does suggest continued impressive monetization. The number of daily active users I mentioned earlier, about 3.58 billion, for Q4 2025 was an increase of about 7% year over year. On top of that, ad impressions delivered across all of the app ecosystems for Meta platforms increased sequentially quarter over quarter by 18% as well as 12% year over year. Now, not just the total sales and monetization numbers, you have to consider the average price paid per ad also increased 9% year over year. Lastly, one of the important metrics many analysts and investors were looking at is capital expenditures. The company does expect in 2026 that total expenses to be in the range of $162 to $169 billion as it aggressively front loads AI compute capacity. Now let's look at some other positives when it comes down to Meta platforms. First off, Meta's capital expenditure ramp has generated intense investor interest as it chases the newest developments in generative AI. AI investments are already generating strong revenue growth, with AI tools improving ad conversions and user engagement, evidenced by 24% year-over-year revenue growth as posted for Q4 2025. The company seems to be capitalizing on AI investments, optimizing ad revenue, and leveraging its platforms like Facebook and Instagram for robust user engagement and monetization. The increased capital expenditure guidance may also be a signal of confidence in artificial intelligence infrastructure investments, which are expected to deliver robust returns and support long-term growth over time. The company's diversified ad mode and strong advertising business continues to drive its total growth, with AI initiatives positioning the company well for future expansion in the digital advertising landscape. On a forward basis, the company is expected to continue to grow in the next 4 quarters its sales by close to 19% at approximately 18.65%. This is about 200 basis points higher than its 5-year average of around 16.5%, which is again a little bit lower than the last quarter, which was robust at over 23%. Now, Meta also excels in profitability relative to its core expenses other than capital expenditures. Gross margins on a trailing basis remain around 82%, about 100 basis points higher than the company's 5-year average, as well as a significant increase relative to the sector median, which is close to 54%. More importantly, the company still remains very profitable on a net income basis, close to 31%. This is a significant increase relative to the sector median, which is a little over 4%. Now, despite many of these positives, there are also some concerns we have to address as always. Meta's substantial AI infrastructure spending may be seen as a defensive move, with uncertain return on investments exposing the stock to potential valuation compression. Reality Labs continues to be a financial drain, with ongoing losses impacting overall profitability amidst high capital expenditures. Regulatory risks and competitive pressures in the digital advertising space, particularly from new entrants like OpenAI, pose challenges to Meta's growth and market position. Now let's take a look at the technical picture for Meta. The current stock momentum is strong, with year-to-date gains of over 9%, mostly due to the most recent earnings announcement. The stock recently gapped higher above previous resistance areas, posted around $690, which indicates strong bullish sentiment and investor confidence in the company's prospects. Year-to-date returns are positive, but returns to Meta investors are lower than the broad S&P 500 and NASDAQ on a 52-week basis. This suggests that the initial CapEx expenditures relative to sales in 2025 was not initially well received. However, the stock is back above both the 100 and 200-day moving averages, suggesting an improved technical condition for Meta, which indicates the intermediate-term price pattern is bullish. When you look at momentum and relative strength, the daily RSI is above 70, and momentum as indicated by the MACD also suggests the technical picture is strong and improving. Now, in summary, when we consider Meta platforms, we always have to remember that this is a company in the forefront of developing products and technologies that facilitate human interaction and connection. AI investments are seen as necessary for maintaining dominance in the social media industry, with its core advertising business continuing to show robust performance. Despite the high level of capital expenditures that I mentioned, as well as the guidance for 2026, Meta is inherently a very profitable business, increasing so with scale with billions of users across all of its platforms. Meta retains global power that remains concentrated, which combines scale and everyday relevance. The company has a compelling potential of AI monetization across advertising, engagement, business messaging, and devices, which is an ongoing emerging opportunity. Over a long horizon, analysts continue to expect positive returns for investors as the company provides valuable, immersive social experiences while expanding its global influence for years to come. All right, thanks again for joining us on the Tech Corner. Please don't forget to like and subscribe to the Schwab Network. I'm George Tillis. We'll see you next week.